But let's welcome on board Hemang Jani as well. And let's begin by with the pharma sector itself, Hemang. What's your view? Are you looking at, let's say, the hospitals more positively? What's the sense on the diagnostic space? Or is it the CDMO and pure play exporters which seem to be more better placed?
Good morning. Yes, I think pharma and healthcare as a space, is doing well. If you look at the recent quarterly numbers, I think with very few exceptions like Landmark, most of the companies delivered in terms of the revenue, and more importantly, there was a margin expansion seen across Aurobindo Pharma, Sun Pharma, Dr. Reddy, Lupin. So I think, for companies, both in terms of the generics and the domestic market, things are looking better. So definitely one should really go for maybe large cap names like Sun Pharma, Dr. Reddy, Cipla. Incidentally, Cipla, I heard about the discussion. The fact is that the stock was up yesterday 1.5%. And this OAI was known very much earlier. Now there's a warning letter, but there's no impact as the critical products have already been shifted to alternate site. So, people would focus more upon the corporate action rather than this warning letter per se. So, yeah, in terms of diagnostic, I think Dr. Lal Pathlab in particular, the numbers in the management commentary on next year, the pricing pressure getting eased out is surely good. So I think some exposure is surely, warranted in the diagnostic space, particularly Dr. Lal Pathlab.
Interesting. And yes, that corporate action in Cipla has been much talked about. Let's see as and when that does take place. But I know, Hemang, the last time we were having a conversation, you had a bit of a cautious view on the Tata Tech IPO. Now, on day one itself, it's been subscribed 7 times. Is there anything that has changed your view given the kind of interview and the commentaries that we have been hearing from the management?
Yeah. So see, my view is that Tatas have very complex structure. The same kind of work is being done by multiple companies. In case of Tata Technologies, only large client appears to be Tata Motor, right? And the valuations, yes, the mid cap IT companies are commanding valuation which is at a premium to the large cap companies. But I do not find any great justification in valuing the company just for the sake of OFS. So, because of the fact that it's a Tata's, name and the technology company, you will find investor interest. I don't deny that. Question is there a great justification in paying this kind of a valuation to a company which is just one big client and which is giving you, share at a 35, 40 times P multiple?
Hemang, everybody is excited about suddenly owning real estate stocks. How much of the action in real estate stock is justified with what is happening on ground? Because this is one sector where you can look at on ground and then assess.
Nikunj, Mumbai, we are all here and we all can see the kind of activity which is going on and kind of digging and the pollution that construction activity has created. So both in terms of the activity, in terms of the sales, the fresh sales. In fact, pan India, when you look at the data point, Mumbai would be the highest selling market when it comes to the fresh sales for real estate. So, there is absolutely no denial that the activity across has been good. The only point here is that how much of that is already in the price, and is there any justification to, buy at current valuations? And are these numbers sustainable, right? So, my take is that, at least in the near term, I think maybe 6 to 12 months, given the kind of buoyancy that we are seeing, there is going to be some interest. I would prefer to buy if there is a small correction, let's say about 5%, 10%. These are all high beta stocks. Interest rates haven't really gone down, and I'm really surprised that even at higher interest rates, these kind of numbers are being delivered. So I want to have some exposure, but purely from a momentum perspective, core holding I would prefer only if there is a meaningful correction.
Hemang, there's a sale on Jubilant Foodworks today. It's CLS is calling it expensive, and the data now seems to be saying that this entire binge or so-called QSR spend now seems to be stagnating.
Yeah. So Nikunj, we do see a certain period where you will see certain sector rotation and the numbers not being so great. But what we must understand that as a theme in a country like India, QSR will remain a big theme in terms of growth, in terms of penetration, and you will see a little bit of volatility, but one will have to have some allocation towards that. And when you look at the numbers, I agree they have not been great, but if you look at Devyani and restaurant brands, numbers were relatively better. Even West Life. So I think sector rotation is what I would call it. Theme I think is going to remain very strong from a 1 or 2 year perspective. Just to give you a case in point, can you imagine the kind of market cap that a Burger King enjoys being a global franchise, and it would not be even 3% of that in India with such a big market. So I think the potential is huge. You will have to really take a 2 year kind of.
Let me ask Hemang as well for a stop bet right now. Hemang, anything that stands out where you've done the work and you think it's a high conviction buy?
I think sugar as a space is coming back in action globally. Sugar prices are forming up, and core story of ethanol and the entire balance sheet strength that started maybe 2 years back is very much continuing. So I think Balrampur is something that I would surely go with. The other name would be Titan. I think you guys must have seen that the US, outlet that they opened up, there were long queues, and I think at an aggregate level, the global markets like US and other markets would constitute almost about 4 to 5% of the sales, which I do not think analysts have factored in. So I think Titan and Balrampur are the two ideas that I would like to go with.
All right. Thanks, Hemang, for taking time out and joining in.